Welcome to Real Estate Radio Live, an informative and engaging hour discussing everything you need to know about the world of real estate. Your host, Tom K. Wilson, provides you with insight and guidance from his years of experience as a successful real estate entrepreneur on how to buy, sell, finance, and invest in real estate, and much, much more. Now, here's your host for Real Estate Radio Live, Tom K. Wilson.
Thanks for tuning in to our Real Estate Radio Live program, your number one source for all of your real estate needs and education. We have a great program for you today with about notes, and don't run off saying that's not my business. Maybe it should be. So we have one of the nation's leading experts on it, Eddie Speed. So stick around. We're broadcasting from the number one business radio station in the San Francisco Bay Area, KDOW AM 1220, the Wall Street Business Network. I'm Tom K. Wilson, your host for the 2 p.m. Wednesday edition of Real Estate Radio Live that comes to you daily Monday through Friday at 3 p.m., along with my program at 2 p.m. on Wednesdays, along with my co-host, Joe Kuchera. If you can't make the live show, you can catch our podcast on reradiolive.com, and you can catch my programs on tomwilsonproperties.com or on iTunes or on YouTube. If you would like to get some weekly newsletter, please go to tomwilsonproperties.com. You get some updates on economics and what their latest offerings are and what's in the news in the area of real estate on a weekly basis. We have a report that you can ask for on how to go about selecting the best metro and the best kinds of products to invest in. And we always welcome your questions, suggestions for topics, and guests to have on the program. And we also offer free consultation if you would like to use us as a sounding board for what direction, what options you might have to expand your investments in the area of real estate. So it's nice to have you with us today, and it's awfully nice to have our guest today, Eddie Speed. Eddie is one of the nation's most experienced note buyers since 1980. He's dedicated his professional life to the seller financing and non-performing note industry. Over the years, he's introduced innovative ideas and strategies that have positively impacted the way the industry operates today. He founded the Note School, which is a highly recognized training company specializing in the teaching of buying both performing and non-performing discounted mortgage notes. And he's the owner and president of Colonial Funding Group, LLC. He's been a leader and innovator in the note business for over 30 years, and it is great to have him with us on the program today. Welcome, Eddie.
Hello, Tom. How are you, sir?
Good. You're calling in from one of my favorite cities, as most of my listeners know, Dallas-Fort Worth.
That's correct. I probably sound like I'm from there too, right?
Well, good. Then that makes you authentic.
Yeah, that's it. That's it.
How long you been there, Eddie?
I moved here in 1982. I started in the note business actually with my father-in-law and his partner, and over in Mississippi, actually. But they were kind of pioneers of buying, at that time, seller finance notes. And so when my wife and I married, we wanted to go to the big city. That was kind of seemed the place to go to pursue notes, and we did, and we've been here ever since and raised our family here.
Well, we, as a born and raised Southerner from Virginia, I certainly love the South and love Southerners. And economically, I love Texas and love Dallas, the business capital of the South. Yeah. And that's certainly it's every time I go down there now, the expansion of the infrastructure is just mind-boggling. You know, Silicon Valley is certainly on fire where we live and where we do the program from, but certainly DFW is another one of those hot cities that I think will have more longevity in this run-up than some of the other bubble areas. So Eddie, let's jump into the meat of the program here, and I'm sure to many people, notes is something they've heard of, but it's kind of a foreign entity and something they pass by, and maybe because they don't understand it or because it seems complicated. And I know part of your business on the education side has been to take some of that myth and so forth out of it. But let's start with basics. Just overview what's a note and why do you like notes?
Okay. Well, a note can be a dollar bill. A note can be a check. We buy real estate secured notes at a discount. And so I use the analogy that if you gave me a check for $1,000 and I didn't have a checking account, in other words, I couldn't go down to my bank and just deposit the check, and I went to your bank and they said, we won't cash the check because you don't have an account with us. And there's a lot of big banks that will do that. Then I would have a problem, right? I couldn't get to my money. And so there was an industry developed around that where I could go to a check cashing service and they would cash the check. And people say, yes, but there's a catch. They say they charge a fee, and I correct them and say, no, they actually don't charge a fee. What they really do is buy the note for less than what's owed. So if they gave me $850 for your $1,000 check, you still owe $1,000. And they bought the note at a discount. So I buy notes at a discount, less than what the borrower owes, but these are loans secured by real estate. So they're not, unsecured notes like a check. They're secured notes where there's underlying collateral, and in my specialty space, it's real estate.
What a great analogy! I like that. So, what are the reasons people buy notes?
Well, for right now, and I'm sure we'll wind off into this, but there's this overwhelming inventory of notes, so far exceeds the inventory of bank foreclosed properties. And today, that the typical real estate investor, our typical note school person today is a real estate investor, an REO agent, somebody that was in the distressed property buying business that's transitioned into notes because of the inventory. But
that would be me. That would be me. I'm in the REO buying business, and for those of us that are, there's too many of us chasing too few deals.
No doubt about it. And the other side is when you buy notes, you can buy a note that is paying note. I mean, it's performing note and has good pay history. And the idea is, and you have a lot of long-term investment property, and clearly you're very skilled at it, but a lot of people want something more passive than that, and it's easier to own a note than it is to own a rental property. Mm-hmm. I've asked this question. I've done a lot of speaking engagements, obviously, around the country, and I've asked this audience crisscross the country, and pretty much can tell you the answer. You ask an audience full of people that are either full-time real estate investors to very part-time real estate investors. How many of you would rather be a landlord or the bank? And, you pretty much know how the audience is going to vote, right?
Well, to be in all fairness, there are a lot of folks that manage their own properties, and boy, that's not a fun kind of business. But if you get any kind of scale, then I think you delegate out that rotten business, and now you're managing the managers. But even managing the managers is I presume, a little bit more time consuming than managing a note. But I don't know. We'll see as it goes on.
Yeah.
Let's see how. So how many notes are there? How many notes? I know from looking at recent data from Realty Track and CoreLogic and so forth that to most people's amazement, this underwater and non-performing note problem isn't over. Here we are, all these years downstream now.
Yeah.
And what are we, seven years downstream from the crash, and lo and behold. It's not all gone. I think Realty Track shows that there's still 7 million properties upside down in the country. So I would guess that means more than that, and I guess maybe more than that in notes, but certainly that many. And that's a lot.
It's a huge amount, and so what really happened is the government had a bailout plan and TARP. And the intention was they were going to slow down the distribution of these distressed assets so that we didn't have a crash on the market all at one time. But what really happened was, behind the scenes, and this is a whole long story and a debatable subject about what all caused it, whether it was the 50 banks, or whether it was Washington, D.C., or who or what or why. But the reality is, when TARP was over at the end of 5 years, they hadn't even pushed out 50% of the distressed assets.
Less than half. Wow.
Less than half. And so as a result of that, and then another thing is, you get into, what the real number is. We believe, and we've done a lot of research, we know that the government will admit to about 4.5 or 5 million defaulted notes. So the government and the top 50 banks report that there's that many defaulted notes. But the reality is there's a lot of accounting processes, like a charged-off loan or a loan where they've sent the notice of default, and a lot of those notes are not reported within those numbers. So we feel comfortable in saying there's about 9 million loans that are delinquent.
Wow, that's a lot. Well, Sal, so that sounds good from a prospective buyer standpoint, but I would guess a lot of those loans aren't very available to a small investor. So how many of these notes are available to us as opposed to a big institution?
Well, let me give you kind of a waterfall of these notes, and we'll kind of go through a little bit of math to kind of get there, but I think it'll give you a better sense than me just giving you an estimate of a number.
Okay.
So already this year, announced basically through CoreLogic or Realty Track or DS News or Housing Wire or any of the sources that I'm sure you know all those guys like I do, and you read their data all the time. But according to them, the tapes, just the list of non-performing notes that have already been pushed out this year. These are ones that made the press, not all the others that didn't make the press. That number totals over $7 billion in defaulted notes being pushed out this year. Okay? So what happens is, yes, you're right. A lot of the big hedge funds buy in bulk all these packages. But historically, there's a percentage of those packages that doesn't fit their long-term investment strategy. And in our case, they're typically smaller notes. They want to keep a certain amount of dollars deployed per note, and if it doesn't meet that, well, then they buy it and then push it back downstream in the marketplace. So of the 9 million defaulted notes, people say, well, are there loans that the properties are bad, or are there loans with title issues? And the answer is yes. And so,
Eddie, why don't we continue that right after the break? We got to take a short one. Eddie Speed is with us today, Nation Authority on Notes, and he's going to get into the details for us for how we go about getting some of these notes. So stay with us on KDOW 1220 AM, Real Estate Radio Live.
For more information on today's program, visit RERadiolive.com. That's RERadiolive.com. Welcome back to Real Estate Radio Live, streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, just visit RERadiolive.com. That's RERadiolive.com. Again, your host for today's edition of Real Estate Radio Live, Tom K. Wilson.
Thanks for being with us today, and thanks for staying with us. We have a great program with Eddie Speed, a leader, innovator, educator in the note business for over 30 years. Nice to have him with us. Before the break, we were talking about kind of the waterfall of how many notes are available for the small investor. We're starting at something like 9 million, we think, nationwide, and continue, Eddie, if you will, on the waterfall, what's available to us.
So, yeah, there's some notes that are going to sort of have a worthless factor. You know, the property's blighted, not worth fixing up. There's been loss to taxes. There's some loans with title issues. So you kind of can lop off a percentage of the market, say a third. So say 3 million of those notes. Then there's 6 million left, and we we see the small investor typically having a look at more of the smaller balance notes and not the larger balance notes. Now, by the way, the advantage is those notes are about half the cost of the more expensive notes. So, and once again, there's a process and people understanding how you evaluate it and can I be comfortable with this and all that type of thing. But we believe there's between 2 and 2.5 million notes that are going to get pushed down away from the hedge funds onto the small investors.
And when you say you can buy them at half, are you talking about percentage-wise? There's more discount on the smaller notes?
More discount. So let's just say that you had a $200,000 note. That note might trade to a hedge fund, even though it's non-performing, at 75% of the balance of the note. Crazy as that may seem, that's true. Whereas if it's a smaller note, that note might trade for 35 or 40%. So if it were a $80,000 note, a $60,000 note, that note would trade at 35% of the $60,000 balance. So
why does that discount get higher when the total value of the note goes down?
Supply and demand. The hedge funds. Hedge funds have a big appetite for higher price band assets. It's typically recognized that most of the big capital firms that buy those assets have kind of a minimum dollars invested per note if they want to keep the asset, and the rest of them become, to some degree, salvage value.
Just like an institutional investor, say for retail centers, they got so much money to deploy, they can't afford to be chasing little $5 million deals. They got to chase $20 to $80 million deals.
Just exactly the same.
Okay, all right, because there's so much money there to deploy, and it takes so much more administrative work and bureaucracy and so forth to deal with the little ones, which is perfect for us little guys.
That's correct.
Okay, good. All right, I got that. So how's the supply demand in notes look today compared to a year ago or 5 years ago?
There has been a steady supply of notes for probably the last 18 months. Not a flood, but a steady supply. It was predicted by the fourth quarter of this year there's going to be a flood. So far this year, as I said earlier, there's about $7 billion in trades already announced of non-performing notes. Now, those haven't all been funded yet, so there's a process. But we are anticipating by at least the fourth quarter of this year, if not earlier, we're going to see a drastic increase in the amount of notes that are going to get pushed out of the system.
So that should help the supply demand for the small investor who wants to get in this.
I've heard companies that play at a very high level in this space use expressions like "strap your helmet on."
And the reason for this sudden deployment is what?
Well, this is a debatable subject, but it seems to hold some logic with me. I know there was a big conflict between Washington and the top 50 banks. Top 50 banks own about 90% of this inventory. There's a big conflict with them about, you shouldn't have made the loans, we're not going to let you foreclose, and so forth and so on. And that seems to be track with what we're seeing out there.
We only got about 15 seconds left in this segment, Eddie.
So then the municipality said, we've got to push these non-producing houses out of the system and have them pay taxes again. That's what caused the triggering effect of saying, let's move all these loans. The municipality.
Okay, let's pick up on that topic as soon as we get back. So we're listening to Eddie Speed, a national authority and educator in the note business. This is Real Estate Radio Live, and we would love to have you stay with us here and to get a lot more information from Eddie. We'll be back in just a moment.
For more information on today's program, visit RERadiolive.com. That's RERadiolive.com. Welcome back to Real Estate Radio Live, streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, just visit RERadiolive.com. That's RERadiolive.com. Again, your host for today's edition of Real Estate Radio Live, Tom K. Wilson.
We've got Eddie Speed with us today, talking on the subject of notes. Eddie's an educator and national authority on the note business, and it's great to have him with us, helping to teach us what it's about and how we can participate in that. And by the way, I haven't mentioned yet, but if you're listening to this prior to May 9, 2015, either live or on podcast, Eddie will be speaking at the SJREI on May 7 in the evening at 7 p.m. and it's doing a workshop on May 9, Saturday from 9 to 4. That's at the Domain Hotel in Sunnyvale. Go to TomWilsonProperties.com for more information, or go to sjrei.org. So we're talking about the how many of these properties are available, and that the notes are going to be, we anticipate an increase in the amount of supply of notes in the marketplace. Right, Eddie?
That's correct.
Okay.
All of the major government-related entities have announced, Fannie Mae, Freddie Mac, FHA, that they are selling notes versus taking them to foreclosure.
Mm-hmm. So it's just an easier process for them, right? Cost less.
Cost less, and there's
Quicker.
such a pressure, as we said, from the municipalities. Municipalities have basically said, we've got to have city services paid. We can't continue to have these non-performing properties in our area. They're not paying taxes. They're not paying water bill. It costs more to patrol it because of vacant houses. And so
the local Davids are influencing Goliath a little bit there, huh?
You got it. That's it.
Interesting. Okay. Why didn't they sell more notes earlier instead of the increased cost and hassle and timing of short sales and foreclosing on properties and all that? Why haven't we seen this increase in pushing notes 4 years ago?
You know, from an entrepreneurial perspective, I certainly can't understand it. I mean, we saw it coming. We understood what the problem was. We knew what we thought would be the best way to wash it through the system. And if you're asking me to give you a logical answer, I don't have it.
I forget. We're dealing with the government again, right?
Yeah, kind of, sort of.
Okay. We just got about a minute left in this segment. What are the key advantages of notes? Why do you like notes over real property?
Well, right now, if you're looking at notes, you're looking essentially a defaulted note. You're going to end up with the possession of the property in a lot of transactions, not every one, but a lot, and it's just a cheaper way to acquire the property. For performing notes, it's just you can be the bank and earn interest and get your money and have a pretty passive investment.
Mm-hmm. And then there's a technique of using the notes to acquire property, right?
All kind of note techniques. There's so many things you can do. I believe it's the best single investment and self-directed retirement accounts you can have. It's fun to go teach people stuff they haven't thought about.
Indeed, this is fascinating. I think most real estate investors just kind of passed over this opportunity. And someone I haven't dealt with notes. I've talked to others that have, and my sense is that it's a potential way of acquiring property. I have clients just banging on the door, begging for product that we can't get. So notes might be a way for us to get it to satisfy our client demand. We have Eddie Speed with us today, educator and authority on the note business, and we're glad to have him with us here on KDOW 1220 AM. And we will be right back with Real Estate Radio Live, talking about the business of notes. So stay with us. We'll be right back.
For more information on today's program, visit RERadiolive.com. That's RERadiolive.com. Welcome back to Real Estate Radio Live, streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, just visit RERadiolive.com. That's RERadiolive.com. Again, your host for today's edition of Real Estate Radio Live, Tom K. Wilson.
We have with us today Eddie Speed, one of the nation's leading authorities and educators in the note business for over 30 years, and it's great to have Eddie with us today. Eddie, walk us through briefly the flow chart. We did a little bit of that earlier, but through the flow chart of how a note winds up down to an investor like me.
Okay. Well, most of the big packages today, they don't. 2 or 3 years ago, they would have separated like smaller notes and bigger notes and regional notes and loans that were in Michigan versus loans that were in California or that type of thing. For the most part today, the asset managers for the big banks are not separating these packages. They figured out that they can make the big hedge fund buy the whole box. And I always call it the top 15. And, of course, without specifically naming a whole bunch of them by name, but you and I could probably count off, and, it's this firm and that firm, all of which were super active in buying loaded cash flow properties. They own a lot of these these doors, these residential doors that are loaded rentals. And they've switched gears, and virtually every one of them have gone into the non-performing loan space for the obvious reasons. We think there's about 300,000 REO properties and 9 million defaulted notes, so crazy inventory imbalance. So they end up with some assets in their bucket, their big box that they bought, that aren't going to fit them. And then they resell them, and they sell them to firms that specialize buying in bulk of these smaller price band assets. And that's where a company like ours, and there's many companies like ours, that we have an investment side to our business, and we buy these. And then a lot of firms like us don't want to keep all the notes we have because it's too many at one time, or we're running essentially a distribution system. Now, that doesn't mean we won't keep some of them, but we don't keep all of them. And we resell them as little as one investor at a time.
Now, when you're buying them,
sell it by the bottle.
Now, when you're buying batches from with properties we call tapes, but when you buy batches of notes from the bigger institutions or bigger firms, are you buying a variety of kinds of notes in different geographical areas and different sizes?
Yes.
Okay.
The most of the assets we see, this isn't 100% of the time, but a high percentage of the time, we're buying assets where the collateral value is less than $125,000. Now, if that were in the Bay Area in California, that wouldn't be very good, right?
Right.
But if that's in certain states, you can buy what I refer to as a Leave It to Beaver house in a safe neighborhood that the realtor's opinion of value is $50,000 or $60,000, and it'll rent for $600 to $1,000 a month. It's just crazy, but it's true.
Okay.
And so these are good quality assets. And once again, there was a lot of pressure from the municipalities to say, government and top 50 banks, get this stuff out because we need somebody paying taxes on these properties again and paying water bills and sewer bills. So we come into the market and we buy those kind of assets, predominantly probably in 20 states.
Okay. They tend to be judicial and non-judicial states.
Not really driven by the legal process, but driven by typical price points of assets. So the Southeast, the Rust Belt, the Midwest are going to be more common than it would be in California or Arizona, just because of price.
Okay. We've only got a couple minutes to finish the flow chart, so see if you can walk us through that.
Okay, so when an investor bids on an asset, one of the key elements that we try to teach them to do is how to manage the investment if the property is not next door to them. We've been doing it for 35 years. We understand it. There's resources today that are way better than they ever have been in the past, and people can buy assets that are super cheap, about 35 to 40% of the value of the property.
So once you get these and the large percentage that you don't keep, then is that those available to smaller investors? Just get hold of of a firm like yours and say, I'm interested in notes and what's available?
Yep, there's a distribution process that the industry has developed for that very purpose.
So it's something that's become standardized. It's not. I don't have to just go to your. You kind of have like a national MLS listing service for notes, if you will.
Yeah. There's 2 or 3 national services that we consider credible. There's some more that aren't as good, but there's 2 or 3 national like listing services where people can go look at notes, and that's what we're trying to teach people how to do, is how we evaluate a note so that when they're looking at it, they make a buy that they're going to like and want to live with.
And then if someone is interested in that note, they can go back to the source, which is you at that time, and your company, and ask more details about it.
That's correct.
Okay. Well, that sounds easy enough, but they need the education to figure out how to evaluate it, right? And that's where you come in.
Yeah, we've not had a great deal of success with people without some, a learning process to kind of learn kind of the how the business really works and what they really need to be looking for.
Okay. All right. So how many, what kind of volume do you get a month these days in this market?
I would say that we are going to probably sell 400 notes this month.
Okay, in this month.
Yep.
All right. And that typical size note is what?
The typical investment in the note is less than $25,000.
Huh. Okay.
The size
so I
of
would
the
guess
note could be $100,000, or the size of the note could be $50,000, depending on the equity that they do or don't have. But the average cost in the note is less than $25,000.
And what's the average number of notes that your average buyer gets from you?
It's all over the place. Some of them will buy 2, and some of them, we have investors that come in and buy 50 at a time.
Okay.
But,
all right. Well, let's come back in a moment, and we'll sum things up. We've got Eddie Speed with us, a national authority and expert in the note business, who's going to be talking here in the Bay Area. Stay with us, and we'll tell you how you can go see Eddie. Stay with us. We'll be right back.
For more information on today's program, visit RERadiolive.com. That's RERadiolive.com. Welcome back to Real Estate Radio Live, streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, just visit RERadiolive.com. That's RERadiolive.com. Again, your host for today's edition of Real Estate Radio Live, Tom K. Wilson.
We're talking about notes today, not the kind you take in class in school, but the kind that are secured by real estate that you can buy and sell. And we have one of the nation's authorities with us and best educators and most experienced folks in that business, Eddie Speed, out of Dallas-Fort Worth area. Nice to have Eddie with us. Before I run out of time to give it to you, I just want to let you know that if you're listening to this on live or on podcasts, and it's before May 9, you can hear Eddie live at the SJREI meeting on Thursday, May 7 at the Domain Hotel Sunnyvale, 7 p.m. You need to sign up. Go to sjrei.org, or if you want more information, come to tomwilsonproperties.com, and we'll be glad to connect you up and get you there. And also there's a workshop on May 9, Saturday from 9 to 4, also at Domain Hotel in Sunnyvale. And let us know if you're interested. And I'd highly recommend signing up. It's a very interesting area. So, Eddie, how if they want to connect directly with you, how can they do that? What's your website?
Our website is noteschool.com.
All right. That's easy enough. So, Eddie, recap with us. We got about a minute and a half here left in this segment. Kind of recap what you think the highlights are on why people should consider notes and how they compare to real property.
I think that a real estate investor today really needs to consider pursuing notes just simply because the cost of the note is and ending up with the potential with the property is just a much cheaper way to get into it. And obviously, if they modify and start paying again, you got a great deal there too. So it's like you either end up with a customer that modifies and starts paying again, which we hope that's everybody that lives in the house would do, and then otherwise you repossess the collateral and you end up with you're a pawn shop for real estate. You end up with a house.
So there's kind of two strategies for most people. Either they buy notes because they want to accumulate a portfolio of cash flow performing assets,
Yep.
and that's one way to do it. Or two, they want to get really the house, and they're really trying to get notes that aren't going to perform, and they can close on it and get the property, and that's a way to get product in this very hard to get inventory era that we're in. So did I summarize that okay?
That is absolutely a correct answer.
Okay. So if you'd like to hear more, if this has whet your appetite, connect up with Eddie at noteschool.com, right, Eddie?
That's correct.
Noteschool.com, no punctuation, or get hold of TomWilsonProperties.com and let us know that you are interested, and we'll get you hooked up. Remember, he will be at the Domain Hotel on May 7th, Thursday, in Sunnyvale at sjrei.org, or you can go to TomWilsonProperties.com. So thanks for being with us today. Remember, the only thing that matters is what you do next.
You've been listening to Real Estate Radio Live. For more information on today's program, visit RERadiolive.com. That's RERadiolive.com. Tune in, log in, download our podcast. Discover more at RERadiolive.com. RERadiolive.com.